Hi, Thiago. Hi, everybody.
Hello. So, thanks for coming, everybody. Today we have somewhat of a different event. So generally we do our community calls, but as we are approaching the launch of the NFT Vaults, of our first NFT Vaults launch, which will be the CryptoPunk, we decided to have an EMA on this week. So during the week we received some questions from community members. Basically, we will have an introduction about the NFT vaults, and then we will move on with the questions we got during the week. And after it, we can open to the public for those who want to make any kind of question. Curtis, our biz dev, will be here to answer it.
Yeah, awesome. So, do you wanted me to just start with an intro of what the NFT vaults are?
Yeah, so please, Curtis, go ahead and tell us, our audience, what the NFT vaults are.
Yeah. So, the product you guys are most familiar with so far, obviously, is the yield product. That's optimizing your stable coins, your LP tokens, etc., and DeFi. But what OptyFi is actually trying to do is optimize all decentralized assets and make them accessible to everybody. So the other side that in like one obvious asset category where that takes place is in the NFT world. So now what we have is the NFT vaults. Now we haven't forgotten about yield. Some people are a bit confused about that, I think, but that's where the focus continues to be with this as a new product line. So we have been expanding our team. It's quite a bit bigger now, and we have some pretty good engineering velocity. You see the refactored, we call them, yield vaults have just come out, I believe, yesterday, which there was just an issue that the vaults weren't gas optimized originally, with in light of now that ETH price or gas price is high. We had to re-engineer them, and now they're in a version that allows us to run the strategies as we originally intended. So you can see there's more sophisticated strategies. It's running multiple step strategies for the USDC and the ETH side. They're into convex and optimization engines, checking daily to recommend if it's time to switch a strategy. Polygon launch is coming soon as well. Avalanche after that, and so there's the product. I guess we're starting to ship a lot, and it's going to be some exciting times in the next couple months. But the NFT vaults is what we're going with alongside of that, which allows everyday users to get exposure to optimized NFTs. So how do you optimize NFTs? We're seeking strategists. So these are experts, whether it's qualitative experts on NFTs, maybe they're just experts that have a portfolio, a history of really high performance influencers, and then quants. So we are a quant strategist herself. That's more looking into data, historical data, trait analysis, social metrics, and trying to quantitatively price assets and make purchase and sale decisions from that end. But the point is, with an NFT vault that we've created, users can deposit the ETH, and there will be strategists that the DAO can choose to hire and fire, etc., over time, that will buy and sell NFTs given a mandate that that particular vault has, and it will try to earn you like a high performance over time, and alpha is the important thing. So it right now, this is people were asking what is the difference between fractionalized tokens and this, what's the difference between NFTX and this. It's in this, we're we physically buy the NFTs. So that is what is being held in the vault over the investing period. And the tokens you buy, the vault tokens, represent ownership, your share of ownership in the NFTs within that vault. So the first vault that we're launching is Punks, and then going to, I think, Bored Ape Yacht Club, and then we're getting into themes. So the long-term goal and real point of this is that when you have a theme, let's say metaverse land, we can have strategists that are buying and selling land in the metaverse, specifically, and it might be for many projects. There can be a max exposure to each project, etc., so that as a user, you know exactly what you're getting an exposure to, and then that exposure is optimized. So that strategist is the expert that's trying to buy and sell. You'll be in the community as well, in Discord with your vault token, and be able to talk to these strategists, see what they're thinking, etc. But you can get a defined exposure to like a subset of the NFT world. And even though it's mostly the way we've been presenting it has been mostly geared to why it benefits mainstream users or people with smaller wallets. They can get exposure to a punk, let's say, but it's also beneficial to whales or more sophisticated investors, because if there's a theme that you do not enjoy, you do not have an eye for, like maybe you're not a gamer and you don't understand gaming NFTs, but you really think there's opportunity in the gaming sector of NFTs, then you can buy vault tokens to the gaming vault, and you don't have to think about that yourself, but you know you have exposure to it in your NFT portfolio. So there's a lot of cool angles to this product line, I think, and we're starting with the Punk Vault, which is like the obvious kind of blue chip historical NFT that started kicking off this rush recently. And then branching out from there. So this first one, not only do you get exposure to the NFT, but since it's like the Genesis Vault, the first product, or in the product line, we're gonna give out really good Opti emissions to the vault as well. So yeah, that's, I think, a pretty good overview of the NFT vaults.
Okay, Kurt. So thanks for this amazing introduction to the NFT vaults, and also for what we have been doing on the Yield vaults. So both are really important for us, and I think our community will have the opportunity of try these products and like trust more on us and see that our team is capable of delivering amazing things. So, well, after this short introduction, I think we can start answering the questions we received during the week. The first question was from Arsenal Henry, who's here on the chat. He asked about if our product is able to help NFT projects that they are not so hyped, they are not so famous, but they may have some real value. So how that works? Or are we just targeting blue chips? Can you explain?
No, so each vault will have a mandate or a theme. What that theme is well, we're going to choose the first few, but eventually it's what the community decides on. So if it's metaverse, maybe it's metaverse land, then there'll be many projects in there, and maybe there'll be strategists that this is what all they do all day. They're in Discords, etc. Maybe there's an opportunity in a smaller project that's less known, like you're saying. And this kind of stuff is really, really hard to find, right? So the average user doesn't have the time or the skill set to be able to go through 100 different Discord channels on a daily basis and find out about these opportunities. The strategists will collectively, and they'll buy up these NFTs, and obviously that will help out these smaller projects. And then on like the marketing side, we're kind of trying to partner up with some projects and talking to projects to see if there's any opportunity, because this, even in a bigger project, like let's say Lazy Lions has a 1.7 ETH floor, something like that right now. It's hard for the average user. Sometimes you don't have the capital to put 1.7 ETH into one NFT. But if we had a Lazy Lions vault, that would essentially allow their community to expand in a way, because all the token holders of the Lazy Lions in there are still Lazy Lion owners in the most direct way possible, without direct ownership yourself, I think. And so it's better than what exists today, in the sense that the physical Lazy Lion NFT is being held in the vault, and you own a part of that NFT as directly as you can. Fractionalization would allow you to own like a part of one Lazy Lion, and that's the exact Lazy Lion you have exposure to. But a Lazy Lion vault, we could have David doing some data analysis along with other strategists to be having exposure to like the alpha of the Lazy Lion project. So the buying the ones that are deemed undervalued based on data analysis and selling them at market. Momentum strategies. There's a bunch of cool things that can be done to outperform the market, is the goal.
Yeah, amazing. David, you're here. Maybe do you want to comment something about that? David?
I think we can't hear you, but you're not muted, I don't think.
That should fix it. You guys hear me now?
Yeah. Now we can hear you.
All right. Sorry about that. So I was just saying that, price prediction is going to play a big factor. Act as a strategist in any vault, and that'll apply to everything here.
Yeah. Okay, that makes sense. So the second question is about probably one of the biggest concerns of our community, is about the time locking, right? So for those who are joining the Punk Vault, will have their capital locked for 1 year, 12 months, right? But many of community members are afraid that this time locking is really high for unstable markets such as the NFT market. And I mean, if we are locked, you wouldn't be able to sell your NFT on OpenSea, for example. So what can we say for these users?
Yeah, so there's I think people are really locked into the concept of that the vault tokens are locked, but the vault tokens themselves are still liquid, and we're going to try to think of ways to increase that liquidity. So you can obviously trade vault tokens with one another. We may even start some sort of a buyback program. I can't speak too much to this kind of a thing because it's not confirmed yet, but we're thinking of many different ways to increase the liquidity of the vault tokens in the secondary market. So we may, for example, create a Punk Vault token ETH pair on SushiSwap, and then this would create liquidity for the token. You could trade it for ETH in Sushi. So there's a few different ways that we have in mind that we're trying to enable the ability to trade in the secondary market. That's the biggest thing, I think. And then also the only way, so the vault in itself in the primary market is kind of like a closed-end fund in TradFi. So the only way you can buy a physical asset, so this actual Punk NFT, and have a synthetic derivative of it, which is like the vault token, is to have a time lock. Because so if we let's say we raise $500,000 in ETH and buy a Punk with that, it's not possible to have people withdraw their ETH at any given time. It's in the physical asset, right? So that's, I guess, the problem with it. You cannot withdraw. There's no way around it architecturally for you to be able to withdraw your ETH during the investment period because the funds are going to be in a punk. But we're thinking of ways that you can trade it in the secondary market. And at the end of the day, like what this allows is that you have literal ownership of a punk. So we'll all know which punk we own as a community, and we all know that we own part of that. And then obviously there's other incentives to opt your reward, etc. But if it was just a product that was fully liquid, for example, we could have a vault where it's just a bunch of punk tokens from NFTX. Then you're just getting exposure to the floor of punks, and maybe there's a way that we can exchange, or you can withdraw your ETH at any given time. But it's not possible to accomplish the functions that we have while doing this. So you cannot purchase select punks in the market and try to like perform alpha in any way that would make the vault tokens liquid. And like I said, there will be most likely a secondary market for the vault tokens, but unfortunately you are locked. And at the end of the day, also, if you think like punks and most of the vaults we're going to be doing is a long-term play. So it's going to be like a buy and hold strategy. Even in vaults that you may be locked in for a certain period of time, and the projects that the strategist is interacting with is not like a long-term play, they would be rolling over profits and going into new projects at a more like a higher frequency. So you're, as a user, this should be more of a longer-term investment in the first place, and you're not necessarily locked in the sense that you may be able to trade in the secondary market.
So just to something we have discussed internally that I think it's important to mention to the community is why it's important to have such a higher period of time for a blue chip NFT such as a punk. Like why not doing less amount of time? Why not 3 months, for example? Why we need such 1 year or 12 months?
Yeah, well, I'm still really in the club that we're early in the whole NFT space. So there's a lot of hype over it in general right now, but the use cases are really clear, and more real day utility is going to move over to this. So the punk, the Bored Apes, these kinds of projects that were like the OGs of the space, to get in, really good risk return trade-off. If let's say the whole NFT market tanks right now, when you're in a punk, you're probably gonna lose, be at risk of a less loss than if you're in a higher risk project, let's say. So it's very easy to consider a punk or a Bored Ape like a low risk kind of an asset within this, and then it makes just inherent sense to do the low risk thing first in the product release. It also allows the vault so that Jason, our developer that has been building this smart contracts, has been working a few months on it, but it allows us to release like the V1 iteration. So it has a single asset, right? That's the punk. We don't have to do really confusing rules with portfolio managers, strategists, etc. But his vault architecture he built with the diamond proxy, which allows for upgradability in the future, and we can do these kinds of opportunities with other DAOs, with like investment groups, etc., where there's going to be many assets in the vault, and it'll be more like a big fund, which is really cool.
Yeah, makes sense, and I think this is a huge incentive, like to people who really believe in NFTs. They can try our product as a way of get optimal exposure to them. So now we got another question from Ready Player. So he's saying if there are plans on the NFT Vault roadmap to use some strategies beyond buy and sell, beyond flipping. So, for example, there are some ways of getting exposure to NFTs on the metaverse, such as renting out land, or for example, some kinds of building stuff and then creating some kinds of services on the metaverse. So these are ways of increasing the utility and the value of NFTs. So he's asking if there are plans to explore these possibilities beyond buy and selling.
Yeah, exactly. So that's, I think, like, it's literally limitless, and your head will explode if you try to get into the wormhole, right? But that's one thing that's really cool about this product. When we have the, like, let's say there's a set of three or four strategists behind a metaverse vault, then the strategy the strategy right now is defined as buy and hold, but there's so many more different possibilities of how you can generate income within that subset of NFTs. Like, you can charge rent for your land in some projects. There's other things Thiago just mentioned that whoever was asking questions was saying, but it does not only have to be refined to buy, sell. It can have so many income sources, and this kind of a thing is like a full-time job. So it really speaks to what the product is about. If you're interested in trying to access all of these different income strategies that can be formed out of the metaverse, and then you want exposure to like 6 other different sectors of NFTs, you want exposure to art and collectibles, to gaming, to etc., then you can't even have a day job anymore, or you're not sleeping. So this is what you can just go and buy vault tokens and participate in the community. You can chime in with your ideas even. The strategists will listen to what you have to say. You can learn from them. But it's like a community-driven effort that you can get exposure to.
Mm-hmm. Yeah, makes sense. Really exciting, to be honest. So we got another question from Arsenal Henry. So he's asking in short, what happens if NFT floor goes down? What will happen if assets price depreciates? So, and how can we control it? Can we do something about price depreciation of the whole market, for example?
Yeah, there's a couple things. First of all, like, to be clear, there is a risk of loss on the principal if, like, let's say the whole NFT market goes down 30 whatever percent. But if you think about let's think about the return in the case where it does go down. You're also at the same time earning the Opti rewards on the side, which is totally to the extent of being correlated to NFTs, it's uncorrelated. So you're earning Opti rewards. This really mitigates your risk of loss in the first place above what somebody that just simply has a punk would be. So maybe if their crypto punks go down 30%, you only go down 5% because you earn 20% in Opti rewards, right? So it's, in one sense, there's loss mitigation through the rewards incentive program. And then the other way, so the only way that it would be possible to really limit your losses is to do some sort of like a more sophisticated hedging strategy. And we do have that kind of thing in mind. So it's not going to be in the punk vault, but we're talking to people that are interested in developing tools to do like options on NFTs. And so, of course, in the future, there may be something like the strategists behind the vault are buying puts, like some a put position that limits the loss to a max of 40% or something. And then as a user, you can set a stop loss. This kind of thing is super confusing. And again, just reinforces why we built the product. we have strategists and financial experts, or et cetera, that can be behind the vault and working together as a team, figure out all those kinds of things, so that you as a user are at like kind of the big advantage, as we have seen some people be at these days, you know. So there's some whales that right now they have access to like Nansen, several funds they talk to, etc. It seems like they have almost like an ATM machine, because they have such a resource or information advantage in the NFT world right now. That's what we can hopefully try to achieve together as a community behind a community-driven vault.
Yeah, well, and I think it's important to mention also that if you're thinking in terms of Ethereum value and not only USD value, this is probably worth a try, right? Because if you believe that there is a huge chance of CryptoPunks outperforming Ethereum, seems an interesting investment at this stage, right? And remembering 1 Ethereum is equal to 1 Ethereum. So, yeah. However, let's go ahead. So, Jack Tai is asking about our roadmap. So, besides the CryptoPunk vaults, what other blue chips NFTs we are thinking about creating vaults?
So the next blue chip one and the second vault is going to be Bored Ape Yacht Club. So you'll get exposure to Bored Apes, obviously. So that'll be like vault 1 and 2, and then we're thinking about going into some themes like gaming, metaverse land, etc. The next time, though, that there will be like the blue chips again is a concept I think would be super cool. So I'd probably propose it to the community in the future, where like maybe there's a literally just a blue chip NFT vault. I think that's a cool theme. So we could have a basket of many different blue chip NFT projects, Suzuki, like Punk. Maybe there's a Punk in there. There's a few Bored Apes. There's some Mutant Apes, etc., etc. That'd be a real. I think that's a vault that I'd want to buy some tokens to. So that's the next thing, like in my mind. But the first vault's Punk. Second is Bored Ape. Then we go into some themes, and then it's basically a community effort to decide what are the themes after that.
Okay, that's awesome. So let's go ahead. So Fun made a question. You already talked a little bit of it, but maybe you can explore a little bit more about the difference between our NFT vaults and NFT fragmentation, right? There's a better word for that, right? NFT fractionalizing. So what's the difference between them?
Fractionalization in ours is like so if you fractionalize a Punk, you're getting exposure to that one Punk, right? But so let's say somebody is offering whatever 1/200th of their Punk for X price. You get exposure to that one person's Punk. In our vault, the Punk is being held, and then strategists. First of all, strategists are doing data analytics and trying to determine what is the best Punk to buy. So you're getting, the point of this is that you're trying to get exposure to alpha. So David did a Punk analysis last Friday that was pretty cool. And you can see from that, there's like some Punks, maybe it has a hoodie and a toque. And with that information, it should be trading in an 80th decile of price. If for whatever reason somebody has a Punk with that up for sale in the 5th decile, then that'd be a good buy. We can hopefully determine what is an undervalued Punk in the market and buy, maybe sell and buy another over time if we see another really good deal. But you're getting exposure to something that the goal is we're trying to not move in line or in correlation with the average Punk. We're trying to beat Punks, the overall market of Punks. And one step further to that, not start to the initial NFT vaults. So the initial ones are just one asset. But further down the line, there can be many different assets, many different projects under one theme of one NFT. So that's like exposure to a basket or to a theme. And that's not really possible through fractionalization, obviously, unless there's some sort of way to fractionalize a basket of separate NFTs, which is essentially what we've built. So yeah, I think there's quite a bit of a difference. That's in terms of fractionalization. Some protocols like NFTX allows users to buy, like redeem and purchase Vault ERC20 tokens in exchange for their punk. What that concept inherently does is gives you exposure to the floor of punks. So somebody would have to be a crazy person to put their rare punk in exchange for punk tokens. It automatically enforces that you want to give up the cheapest punks, and that's a basket of the cheapest punks in there. In ours, there's the strategist trying to pick what are the best punks. And the best punks aren't necessarily the most expensive ones. It's not necessarily an alien or something like this. It's if there is a $500,000 punk by David's valuation models in the market currently for $300,000, that is a good punk. That's what you're getting exposure to.
Yeah, awesome. So Fun made another question that's really interesting, some kind of provocation, is about our target user. So which kind of users are we targeting? Because in his opinion, whales, they don't need an NFT vault because they have enough funds to buy directly the NFT they want to. So, and they wouldn't need to have someone working as an asset manager for them. And on the other hand, he thinks like retail traders, they want to take more risks in order to become rich, to get money. So they wouldn't be interested in the NFT vaults. So what's your opinion on this?
Yeah, well, I was kind of starting off the call with this in the intro, but the NFT vault, so the most obvious use case, in my opinion, is the retail investor who may not have the funds needed to buy a punk, or maybe they don't have the time or to look into NFTs and be comfortable with buying one, or they don't have the expertise required to do data analysis and try to buy a good one, etc. These kinds of people are like really a target. But to the whale not benefiting, I think I already spoke about that to start. It's not true because it really opens a good opportunity to easily allocate exposures to your portfolio if you're like a sophisticated NFT investor or an NFT whale. If you do not like gaming in general, and so you don't understand how to value gaming NFTs, you don't even really want to look at the research the projects, it's kind of a pain in your butt, but you're really determined that gaming NFTs are going to do well in the next few months. So you want 10% of your exposure invested in gaming NFTs. You can solve your problem in 20 seconds by buying Opti gaming vault tokens. So yeah, that's just in one way that it is, I think, really cool for a whale. A group or even maybe a massive whale might be interested in this. We have in the future the ability to do custom NFT vaults. So maybe some investment group is interested in having their own portfolio managers, their own strategists. They can run their own vault, right? And maybe they want to give their own tokens to it. So it's like vaults as a service. The other way it can really benefit experts is you can become one of the strategists. So we're really encouraging a bunch of competition, and the best strategists will earn the highest profits. So strategists earn a portion of the performance fees, and also in some cases they have incentive to, like right now there's a punk data competition with 5,000 Opti reward, for example.
Yeah, so Fan made another interesting question about the liquidity, because as we are investing in NFTs, we know that's an illiquid market capital. So he's asking if it's not dangerous to invest in NFTs due to the lack of liquidity and how we're going to deal with it.
Yeah, so well, that is very dangerous for everybody. And what all you can do about this danger is this risk is you can try to mitigate it as much as possible, right? So the way you can mitigate it as much as possible is in the system we've built, where we can define that maybe there's a max 5% exposure to one project, max 10% exposure to a given theme, etc., 5% exposure to a specific NFT. This kind of thing will mitigate the risks of like liquidity to the biggest extent that is basically possible. The danger still exists, but sorry, that's how you can really mitigate it. You can have the experts in the first place that are trying to pick the best NFTs, the best projects, but you also are limiting your exposure to any one project in the case that that one flops and has no liquidity. So there's a very small maximum loss versus when you're a user and you can only maybe afford to have 5 different NFTs. That automatically there's 20% of your exposure or your portfolio is at risk right now. In an NFT vault that has the ability to diversify over many projects, there's much less of a exposure risk to a single project, like a big FUD event in a project or anything like this.
Mm-hmm. Mm-hmm. So we have the last question from the community, which is coming from Whale. It's kind of related to what you are talking about right now. Is, well, of course now we have the CryptoPunk, then probably we will have another blue chip NFT that is the Bored Ape. But in the future, how can we choose high quality NFTs? Like how the community will know that we are choosing good quality NFTs in the vaults, right? What are we going to consider in order to choose these NFTs?
Yeah, so that's going to be really the dependent, that's the entire job and purpose of the strategists. So we're having these experts that are driving the vaults, making the purchasing decisions. And then we also have a portfolio manager. So the portfolio manager is responsible to supervise them, watch what they're doing, track their performance, and remove the ones that are not performing well, or hire new ones that we can see have good performance or have submitted a really good data model, etc. So there's going to be at full scope or full scale many different strategists under any given NFT vault, and yeah, that's the community's job to do our best to try to find the best experts, the best strategists to make these good decisions and not buy any crappy NFTs. But the point is that we'll have these experts and we don't have to do all the crazy digging and research ourselves. It's almost impossible to do by yourself in the scale that we'll be able to with a group of people.
Mm-hmm. Yeah, so I think this is really clear. So hope our community could understand a little bit more about what we are building. So now we have gone through all the questions from the community that were written on the AMA. So maybe now we can open the stage. If you want to come here and make a question, you can ask me and I will invite you to the stage.